Hi everyone, welcome to the Mighty Trades channel. In this episode, we are going to be doing a analysis of the global markets and the Indian markets, and let's dive right into it and see what the charts have to tell us. So the first chart that we are seeing here is the Nifty 50 index, and as you can clearly see, last week we had discussed that there was a head and shoulder pattern that had been formed, and that neckline was broken last week, and we saw a continuation of that fall last week as well. So as per the target of this head and shoulder pattern, the market can potentially correct up till 15,300 as per the target. So I believe this zone should act as a strong base for the market going forward. And if we look at the last close from the market, then this particular target is 5% away. So we can potentially expect a fall of 900 to 1,000 points in the next couple of weeks. So it's good to be cautious right now. Keep your positions very light in the market. Things are very uncertain. Let's also look at a couple of global cues to see what's happening globally as well, the larger picture. So I think the biggest concern for everyone globally is crude oil. Right, crude oil is trading at its um, very close to its all-time high now. So this is the monthly chart that we're looking at of crude oil. And if you see here, it's currently trading, the last close happened at close to $118. This was a price which it had created back in 2011, right? And its all-time high is close to $140. Now the worry is that if Russia retaliates or if more sanctions are put on Russia, then that could send the global oil prices skyrocketing further from here on. Already we are living in a very high inflationary environment where commodity prices have gone up massively, and if oil goes up further, then global energy inflation will increase a lot because crude oil is used in pretty much everything from manufacturing plastics to generating energy. So this is going to be a huge worry for a lot of investors and a lot of economists across the globe as to how to tackle this. So until unless this Russia-Ukraine crisis is resolved, the crude oil price I think is going to continue shooting up. If we look at gold, gold has also shot up to its all-time high. Its all-time high was 1981, and right now it's at 1970. This clearly shows that money is being moved from the riskier assets like equity markets and stock markets, and it's moving to safe havens like gold, which are a store of wealth. So this is also showing the clear sign that the risk is being taken off, and people are moving to safer assets. If we look at another big macro indicator, and that is the US dollar. This chart that we are looking at is of US dollar compared to six or seven major currencies. So this is a an exchange value that you're seeing here of US dollar against pound sterling, Swedish krona, Swiss franc. So there are 6 7 currencies against which this metric is being paired, and US dollar is also in a very strong up move trajectory since July of last year, and this is also now currently at a very strong resistance zone. So if the US dollar breaks this level of 98.9, then we can expect a further correction in the market from this point onwards, because what this is indicating is that um, money is flowing out of other emerging economies like India, Thailand, Indonesia. So money is being sold off from there and it's being turned to US dollars, and that money is going back to the US. So that clearly shows that money is finding its way to safer places than other than emerging economies. So that is the global cues that we have here, which are printing a pretty negative or grim picture right now. So let's see what happens with this with this Ukraine-Russia crisis. Because if that further escalates, we are pretty much going to be continue correcting for a couple of weeks more then. Now let's look at some global indices to see what reactions other markets are having apart from the Indian markets. So let's start with Asia. So here we are looking at the Nikkei 225 index. This is the Japanese benchmark of Japan. And as you can see, let me switch over to the weekly chart here, sorry. Yeah, so if you look at the weekly chart, there was a double top sort of formation in Japan, and it's also been in a corrective phase. The next support directly for this market is now at this zone. So there is still a huge scope for a deeper correction in the Japanese market for sure. So this zone looks like the support zone right now for the Japanese market. If you look at Hong Kong, Hong Kong has been in a downtrend since a very long time, since Jan of 2018 only. It's been in a downtrend like this. It shot up again due to the COVID rally, but again, it has started correcting since last year itself. This correction started in the Chinese market because of factors in China itself. The Chinese authorities were very strict on the Chinese companies listed out there. So they have been in a correction mode far before any other market. But clearly, the last 2 weeks, this correction has come majorly because of the Russia-Ukraine crisis, as we can see. So this is not a good sign in China as well. The China market is already in a bear market right now. This is the Turkish index, and the Turkish index seems to be holding up well. It's still at its all-time high. It's very close to its all-time high close of this point, which is 2080. So Turkish market is doing relatively well right now. And if you look at the Taiwan index, they are also holding up. They are at the all-time high. So these guys are also doing pretty well out here for now. So let's see how these two markets, which is Turkey and Taiwan, uh, do they follow global cues or no. If we look at Europe, Europe is in a pretty bad shape. I mean, what we are looking right now is at the French market, which is the CAC 40 index. This market has already corrected by, if you look at the top here, it's already corrected by 16%. And last week, the French market saw a huge fall of how much percent is this? This is 10% it dropped in the last 1 week alone. Now this area should act as a support zone. This is the pre-COVID high here. So let's see if the French market takes support or no, because if it doesn't, then the next support will directly come at these 5,600 levels. If you look at the German market has also corrected very sharply in the last 2 weeks. If we look at this here, this is a 19% correction. So hopefully the German market will take support out here. And it also broke this pretty strong support over here. I had expected honestly the German market to hold up these levels, but it wasn't able to. And this support was decisively broken last to last week, and we saw this major crash come in last week. If you look at the UK market, this has also corrected. Now the UK market has not even crossed its pre-COVID high yet, and it has corrected already. It's corrected from its most recent swing high to by about 9%. Again, not a great sign. Hopefully, this base that it established here should act as a support from now on, and the market should stabilize. If you look at the Russian markets stopped trading last week altogether, but clearly the market has corrected uh, quite a lot. I mean, it's gone as close to its COVID lows. So clearly, if the Russian index opens for trading, there is going to be a huge sell-off, which is why they have shut down the Russian market for now. Now let's look at the mother market of everyone, which is the US. US still is holding up. This is the major support zone which it needs to stay above. If the US market corrects further from here, then there is going to be a lot of trouble for everyone globally. Let's switch over to the daily chart for a moment here. So now we are looking at the daily candle, and if we put on moving averages, the the market is already trading below its 200-day moving average. The price is already trading below the 200-day moving average, and this is the last support boundary that it is trying to stay above constantly, right? It has constantly gone below it last in the last couple of weeks, came back, and it's trying to stay up here. Yesterday it looked like it was going to break it, but it there was a sharp recovery at the end of the day, so it has managed to hold on to its this support. Let's see if it continues to do so or no. If you look at S&P 500, the S&P 500 also is again in a similar situation. Let me hide the moving averages here. So we are looking at the weekly chart, and this seems to be the support zone for S&P 500, and this is the price that it needs to try and stay above. And if you look at Nasdaq has already corrected quite a lot. It is currently in very close to going into a bear market zone, but hopefully this whole zone should act as a strong support for Nasdaq. If it manages to stay above this, then we should be, I mean, globally technology stocks should stop correcting. So let's hope it stays above these levels. So the US market is at a very important juncture right now. It's trading at its support since the last 2-3 weeks. If we see this, the US market has been testing this support zone for 2 weeks. That's a Dow Jones. The S&P 500 has been at this zone for 2 weeks. Nasdaq has been trading at its low for the last 2 weeks. So let's see how the US market does. If we look at the volatility index in the US, that is also currently above 30, which is not a great sign. This volatility also needs to reduce. So let's see, what happens globally, because now this is a completely news driven market, and every time US and Russia say something or the other, the markets swing in the directions as per the positivity or negativity of the news. Now let's quickly take a look at our Indian market and see what indexes are performing and how they are doing. So let's start off with the small cap index. So the small cap index has corrected, but if we look at the last week's performance of small cap compared to Nifty, then the small cap index has relatively done well, because this was the bottom that small cap made on 24th Feb, but it did not test or break this bottom here. However, if we compare this with Nifty, this is this orange line that you see here. This is the Nifty's price. Nifty has gone ahead and closed exactly at the bottom of 24th March. So small cap index right now looks a little stronger than the benchmark index, but the way things are going, if it continues to be this way, then I wouldn't be surprised if the small cap index also corrects further. Looking at the mid cap index also very similar story like small cap. It has not tested its bottom that it made on 24th of February when Russia actually announced the attack. Metals are looking extremely strong. Let me put up the Nifty chart again over here, and you can see the story in metals. Nifty is here, and compare this with metals. The metals are trading right now at all-time high, the metal index. So metals is strong. If you look at the private banks are also correcting. Let me put Nifty up here as well. So this chart is basically showing you the correlation between the benchmark index and the sector index. And if the sector index is following the moves of the benchmark index, that means that sector is not outperforming the market. It is performing similarly to the market itself. So the private banking sector is in line with the rest of the market. The market's correcting, so are the private banks. The PSU banks are also in line pretty much with the market. They look a little stronger, but not a lot. They are generally following the market trend. IT is looking a little stronger. Last week, IT had a stronger closing. It did not test its low that was made on 24th February, and it closed in fact in the green by just like 0.15%. So not a huge uh, green, but much better than Nifty. If you look at the FMCG sector is correcting. Very obvious, the commodity inflation that's happening all across the world is going to affect the FMCG sector as well. Media stocks have also corrected, just a little bit more strength than Nifty, but not much. Largely, it's following the market. Finance stocks again have corrected. Real estate stocks are also following the market, they are also correcting. The auto sector is doing really bad because the prices of steel, nickel, zinc, every kind of metal that is consumed in creating automobiles has become just much more expensive, combined with that semiconductor shortage that has been going on. So the auto industry is going through a rough patch right now. So this has corrected much more even than the market, because the auto index made this low on 24th February and it's given a closing below this. So clearly the auto is outperforming in terms of underperformance to the market. The energy stocks are doing well. Very obvious. Oil price has gone up, coal has gone up, so their margins are going to improve. So energy stocks are doing much better than the market. The consumption index is doing lower. The financial stocks have also corrected much more than the market. The pharma industry has been consolidating and correcting since the better part of 1 year now. So there's no strength in pharma at all. And if you look at the broader market is in line with Nifty itself. So now we are comparing Nifty 500 to the Nifty 50 index. So the broader market is pretty much following the market itself. Only two sectors that we have to keep on our watch, which is Nifty Metal and Nifty Energy. These two stocks stand to benefit from this inflation rise. So it's not a bad idea to maybe take some short-term positions here. It's best to avoid taking large positions because the Indiavix, which is the volatility index, is also extremely high right now. So any news driven movement can be extremely volatile, and it could you could end up making a lot of money or you could end up making a lot of loss. So try and avoid large positions, just keep small positions within the metal and the energy sectors. Last index that we'll have to look at is Bank Nifty. Bank Nifty looks like it's going through a bad phase. It's also correcting, and if we compare it with Nifty, let's switch over to the daily chart again. Then Bank Nifty is actually underperforming Nifty even more. So clearly the banking sector is going through a much difficult rough patch here. So the general view right now is that, in my opinion, the market is in a corrective phase. I still believe the market will correct further to this level. I could be wrong. This is just my view. Please do your own research and please make your own view of the market. But right now, the macroeconomic pictures are not looking great, and this war is just becoming, more prolonged as we speak. Neither side is ready to give up in the war. So let's see what happens. But stay cautious, keep tight stop losses, get out. If the index corrects from here, then up till this level, this would be a good time to add some more money into your SIPs. But for now, try and avoid making large positions in the market. Keep your positions very small, and you should only stick to maybe metal or energy sectors right now. So thank you for watching this video. If you found this analysis helpful, please hit the like button, and hopefully you got to learn something. Thank you. Goodbye.